It is really great to be here for this roundtable as part of GTR Asia 2021 virtual. Our roundtable is asking a very important question, and that question is, can greater efficiency and inclusivity help close the working capital gaps? So what is the working capital gap? We seem to have a lot of gaps these days. We have the SME financing gap. We have the trade finance gap as articulated by Stephen Beck of ADB on our first day. We have now we've got the working capital gap. But, what is working capital actually? So according to O'Brien's Irish dictionary, working capital is money that should be put to work, put to productive work, such as financing SMEs, as just mentioned, financing in emerging markets, where we have the trade finance gap. So I have panelists here with me who know more about this subject than I ever will. And we have Wai Yee Choo, Director, Network Trade Platform, Singapore Customs, Farooq Siddiqi, Chief Executive Officer, dltledgers, Mike Walker, Head of Working Capital Finance, Asia Pacific, Finastra, Kheng Leong Lee, Asia Pacific Representative, HPD LendScape, and then last but not least, Desmond Loh, Chief Executive Officer of Guud Finance. Great to have you all here, and great to have this opportunity to have this global discussion while we're all on a virtual world. So let's kick off with maybe looking at the ecosystem. So here we are in Asia, and right now my heart is in Singapore, but I'm in Dubai, United Arab Emirates. So Wai Yee, NTP is government-owned and operated platform, I guess non-commercial in nature. And I'm really glad you were on this panel, as I think what you do in customs is so central to the trade ecosystem. So dare I say, customs are like the gatekeepers. You always have visibility on the movement of goods, the players, collecting import duties, GST, and doing as you've always done in trade facilitation. But now, Wai Yee, it looks to me like your role in trade facilitation is getting more important, well, at least in Singapore, especially in these challenges times. So if I can ask you, what is the network trade platform all about? And I kind of get the trade facilitation part, but I'm interested in some detail how you are going to facilitate trade finance.
Well, thank you for the question. I think the interesting thing about trade facilitation is I think traditionally we've thought about trade facilitation, particularly from customs authorities, as facilitating the physical flow of goods. To make sure goods doesn't get stuck in customs, that the layover times, right, are as short or as minimized as possible. But increasingly, we are also thinking about trade facilitation, not just in terms of making the customs clearance process painless and efficient, but also talking about making trade itself as efficient as possible and as painless as possible. And one of the areas where we think there is opportunity for us to make a difference is in the space of digitalization. Not that we envision ourselves doing everything, because that would be impossible and that would be quite silly, right? There are many more experts out there than we can ever imagine, and there are many players in the trade ecosystem. So what we endeavor to do in terms of facilitating trade through digitalization is to enable data from one ecosystem to flow through to another ecosystem, right? So in this case, it could be from the logistics ecosystem to flow through to the financial systems. It is not so much to bring all the systems together or to make all ecosystem players operate and do their business and transact on one system, ours. That's definitely not the plan. But the idea is that if we could be in the center, allowing the data to traverse ecosystems, all of us can still be transacting on our chosen platforms, working within the systems that best suit our business needs, but not having to deal with data being in our own systems and then exiting our systems through a piece of paper or a PDF, which I fax to you, right? So that is the essential idea around
yeah.
the
So Why you're kind of conjuring up in my mind a picture like we've been talking about these digital islands for a long time,
Yes,
that there are so
absolutely.
many different systems trying to do their own thing in their own world. But actually, and while it has had some success, there's no doubt about it, we really, we haven't, it hasn't met expectations. So are you looking at maybe connecting the islands and or enable the islands to actually exchange and collect and collaborate? Would that be where we're going?
I think there is some dimension of that. There is a lot of discussion about interoperability of systems, interoperability through standards. I think there is still some reservation and some commercial dynamics that prevents wide or large scale adoption of interoperability. And I think we all have good reason to want to hang on to our customers.
Sure.
We all have good reason for doing things a little bit differently from our competitors, and that's going to stay. But what's not productive for all of us is data gets re-entered or data is misplaced and not accurately used. So the NTP endeavors to not so much talk about connecting digital islands, but allowing the data to traverse, right? So each of us can still work in the systems that we are most comfortable with, work with the softwares that we're most suited to operate with, and then still be able to benefit from data traversing our systems and ecosystems.
Yeah, you've really painted a very, very clear picture because, you know, if we think about it, it's the same data that is moving around all the time, okay? It is really, it's just that the purpose of the data is different. So as you say, if we can create an ecosystem where we have that connectivity, and you know what, customs, you know, at these finance events, trade finance, customs historically have not been involved, okay? But really that didn't make a lot of sense because you are the entry point, you are the exit point, you are the first visibility on this data. So I really think this is a great initiative, and that you really painted the picture very, very clear. So just to move on, and in that context, I think I'll move on to Farooq. I will, yes, of dltledgers. Well, I think you'll agree with me that Wai Yee painted a very, very clear and comprehensive picture. But, you know, in your context, what pieces of the puzzle, you know, in your view, can be made more efficient and more effective, focusing on the provision of working capital finance? What can we do?
I think Wai painted a pretty good picture of the fact that what the role of data can do in the context of converting or combining the physical supply chain back into the financing or the financial supply chain. I think when you look at the exam question on efficiency, and you look at it from a perspective of the lender, whether it's a large bank or whether it's an alternative finance provider, I think there are many things which come in the way of making that whole process of funding, especially to the smaller guys, more seamless. And I think when you take the typical 3-4 chunks of the process from a lender's perspective, is number one, how do I understand this customer, not just from perspective of who they are and what they do, but now increasingly there are many more layers of information which is required of this. You think about COP26 and the carbon tax regime and what it means in terms of sustainable supply chain. And therefore, if I'm a lender, I need to now get extra information about whether this guy is complying with various supply chain sustainable sourcing, for example. So number one, I think the requirement of understanding or unpacking the customer has gone up dramatically. And to that extent, if data points can be more democratized, similar to what Wai Yee mentioned from a perspective of customs, that will help create a much more complete picture of who this borrower is. Part of the problem is the blind elephant and the elephant and the 3 blind men. You know, each borrower touches the elephant, getting a little piece of the picture, but nobody has the full puzzle. And unfortunately, if you're sitting down the risk chain, the risks is perceived to be very high because you don't really understand the nature of these guys or what they're doing. So there's part one is really about unpacking who's the customer, and therefore looking at data points across not just transactionally, but across multiple platforms to get a complete picture of what the borrower is.
So data is becoming king, and how we use that data and how we share that data and how we use that data to make correct decisions. But, you know, in the title to our panel, there is kind of an inclusivity angle, you know, there is. And so we need to address it. So there's also an inclusivity angle in our roundtable discussion. And you have set out clearly some initiatives that can be taken or enhanced, especially for using advanced technology? Both of you have done it, but you know, what are the steps to get this capital working capital for SMEs? You know, what are the steps we need to take to move from where you have articulated right now?
So from my perspective, I think there are really 3-4 dimensions to this problem of access. The first one, which we spoke about, was know the customer. I think the second thing is that getting the SME to be much more transparent in the business. I mean, part of the problem when you think about things like frauds, or you think about the fact that you're not sure whether this guy will run away with your money is, I think that whole thing of transparency can be solved to a large degree using technology and making that transparency visible to the lenders. So whether it's transparency on the physical supply chain, whether it's transparency on the information supply chain, which is linked to the physical supply chain, and making that available to the lenders, I think is going to be key. The other element is going to be about data.
You were talking about the importance really of the big picture, or the whole picture, or having data, you know, so that we can make the right decisions. But I just want to continue on with you just for a moment. In my own experience, I work also with technology, and I kind of love technology, but I have a problem of late, and I don't know, has anyone else got it, that sometimes with technology, there is lack of accountability, okay? Because I've had so many experiences lately where in the past, you know, 10 years ago, 15 years ago, working with a bank and trade finance, Mike, or whatever, and something goes wrong, someone, even if there's a problem, they'll hold the problem. They're 2 hours fixing it, but I know they're holding it. But sometimes, you know, you just get dial 1, dial 2, or then recently I was told, oh, don't worry about it. It didn't work because we had a problem with our robotics, you know? So do we need to get a balance, you know, that we still have this accountability and that we use all these things you're recommending?
Yeah, my 2 bit on this, Vin, is that we talk about inclusion, but inclusion also means that while we compete, we also need to be very clear of the areas that we need to collaborate on. And I think to that extent, data sharing is not so much a technology problem as it is a problem of, am I kind of sharing my family secrets with somebody else? And I think that's a big mindset change which is required, and it's going to be slow in coming. Obviously, the government is going to push a lot of initiative in that direction, and hopefully we'll see the light of day on that. Because unless people come together to collaborate on that data, you're not going to see these digital islands disappear tomorrow.
Okay, that's really insightful, and just following on that and on the idea of inclusivity, and Mike, if I can bring you into the conversation now, you know, Mike, the way Wai Yee set out the role of the ecosystem, indeed the role of the government and customs in facilitating trade, and then the detailed initiatives set out by Farooq, you know, while very comprehensive, they still beg a big question, and that big question is something we have been talking about, thinking about, rethinking. And so here it is for you. Can technology, or dare I say digitalization, I actually don't like the word digitalization. I prefer just using advanced technology to solve a problem. But anyway, but my question for you, Mike, is can technology or digitalization really democratize access to money, to working capital? So simply put, can technology make the money that's available work as working capital for those that need and deserve it the most, regardless of their geographic location, whether that's emerging market or whatever? Sorry, Mike, I'm getting long-winded, but that's the question. Democratization, is it going to be done by digital technology?
Thank you, Vin. And I guess the short answer is yes, but it wouldn't be a very effective answer from my perspective if I just left it at yes. So I think to build on what Wai Yee and Farooq have said, you know, there's 2 elements to me, particularly with regards to price, right? And one is cost to lend, and one is cost to serve. And on the cost to lend side, ultimately to build on what Wai Yee was saying around visibility, I love that word, end-to-end supply chain visibility, data visibility. You know, at the moment, the lender, whether that's bank or non-bank, doesn't have that visibility, so is costing that risk of the unknown into a transaction and passing that on ultimately to the end consumer. And there's a certain level of corporate client, I'll say, that can swallow that enhanced cost. And I use the term elitist a lot when I talk about traditional trade and working capital, because it is elitist in the nature of having that barrier to entry because of that price of that unknown. And I think that's where technology, in being able to bring together different data sets from, bank and non-bank sources together, customs sources, directly from the internet, and being able to add layers of context to data to build out this bigger picture, to ultimately remove some of the unknown around that cost to lend, is really where technology can really help, and being able to do that in a standardized way via the likes of open APIs, and being able to manage that data, and dynamically consume it through public cloud models, etc. I think all of these things ultimately are going to enable you to reduce that cost to lend. And then on the second point, I think, not only do you have to lend that money within a transaction, you have to manage that transaction itself. And that is done by a system. There's a total cost of ownership. And again, that factors into the business case of, do you want to do business with these parties or not? And I think by being able to reduce the total cost of ownership and cost of change, again, through the likes of open APIs, platform-based economies, cloud-based solution deployments that can be dynamic and scaled up and down very quickly, again, that ultimately reduces that total cost to serve, and is going to lower that barrier to entry from my perspective.
Okay, well, that's very encouraging, Mike, if it all unfolds as you see it. And I think it is. I think it's beginning to happen. So that is really encouraging. And as you were speaking, I could see that KL was nodding. And then the more you spoke, he nodded more. But I think it meant that he wanted to get in on the conversation. So KL, moving on to you a little bit. Assuming, what has been articulated already regarding the ecosystem, bringing these digital islands together, we have the connectivity. We have the democratization, as Mike has just elaborated on. So basically, assuming we get what we wish for, no more digital islands. Well, but I'm putting it to you a little bit more granular. What are the wish lists for the financiers, the invoice financiers, using such a platform or ecosystem? Over to you, KL.
Okay, first, receivable financing has always been considered as a very labor-intensive and risky business. So in this connection, the National Trade Platform will help to overcome this problem. And also with the advent of new technology, it has changed the landscape in receivable financing. From a labor-intensive business, it has become a seamless end-to-end financing, which enable the financier to onboard buyers and sellers digitally. And it also enables the seller to obtain financing seamlessly and digitally.
Okay.
In addition, this risk has been reduced substantially, as many of the platforms are embedded with risk analytics to mitigate the risk of receivable financing. As such platforms are on rental basis and on cloud, it has created a challenge for the incumbent players, such as the bank, and it's enabled new players such as fintech to leapfrog ahead of the incumbent player, which are beset with legacy systems, which are difficult and expensive to replace entirely. And also, according to the ADB survey, there is a trade financing gap of USD 1.7 trillion in APAC. And platforms such as the NTP will help SME to have access to receivable financing.
Okay, well, I can get how such a platform, as you just mentioned, can open up finance for working capital and dare I say, make it more democratic. As I now have learned, should be made more democratic, as referenced by Mike, and I guess I'm not convinced, but I guess reduce the potential of fraud. But are there any other impediments that we need to take on board?
Okay, basically, there are three major risks in terms of this receivable financing. The first risk is the fraud, which the platform as well, NTP, will overcome this problem. The second risk is the contra risk, which the system with their risk analytic will overcome this problem. But there's one major thing, You can have all the platform that is legal aspect of it. Now, in many countries such as the UK and Singapore, we have a golden standard for the buyer and we have a golden standard for the financier. Now in UK, for example, if you serve a notice to the buyer will have to pay to the seller, have to pay to the bank, and they cannot have the right of set off or contra. So this is a golden standard for the financier. They're very happy with it.
Okay.
On the other hand, there is also a golden standard for the buyer, because the buyer can say, I am not agreeable to the assignment. So therefore you can't do the financing, and therefore there's a stalemate. Okay, and financier therefore will do financing on a non-notified basis, which is more risky, and therefore is more available to the larger company and more established company. SME therefore do not have access. So to overcome this problem in the US, UK, as well as in China, they have passed a law to say that the buyer cannot have the objection to assignment, but they retain their right of set off and contra. So this will help the receivable financing space to move forward.
Yeah, that is really interesting, and it should help us commoditize or tokenize or whatever word you want to talk about trade finance. So all of your wonderful points leads me to conclude that to benefit from this system, we need to be able to trade. So basically, I'm saying we need to be able to trade assets. So Desmond, I'm going to bring you in this concept here regarding trading assets. So Desmond, looking at trade as an asset class for investment, like trade as an asset class from an investment, it's a bit woolly, isn't it? It's a bit hazy, it's a bit woolly. So would a sharper breakdown of trade assets into, I don't know, you know better than me, account receivables, account payable, inventory, warehouse financing, with their own unique determined features.
Yes.
Is this where we can go, but how do we get there, you know?
No, maybe I bring it to the original problem, right? Most of trade assets are generally finance really at the local level. So for example, especially for the SME, a Singapore SME today will be funded, say, by a Singapore funder. And that asset may not be actually in Singapore. So if I take accounts receivables, for example, SME in Vietnam, SME in Malaysia, both selling to Malaysia, to Apple, let's say. And technically the same risk. I think Farooq, KL have already outlined that risk, so I won't repeat that. But assume that the risk is the same. Technically then, but in theory, that asset should be similar in risk. However, unlike say bonds, you can't take that invoice and trade it around the world. Why? Because firstly, cost was a big determinant. So again, if you're generating a $50 million invoice to Apple, I'm sure you can still go around the world to trade it. However, most people are generating $50,000 invoices. Technology today has actually reduced that cost, NFTs as well. But I think the big problem that lies today is actually trade as an asset class on the whole. You take a huge step back, most funders actually do not see trade asset broken into classes. If I were to take trade assets really into three simple classes: payables, in-transit inventory, and finally receivables. I think most funders know the risk, but they do not bucket it as such. Next, if I were to do a matrix on them again, let's just talk about receivables because that's what everybody understands. Again, there are many classes of risk. Yet, if you were to get, say, a fund or hedge fund to look in, it will not actually start to look at all the various matrices. Exactly. So if you were to picture this again, this would be very similar to how NFTs would come in. I think when you start to democratize or break down the asset really into this minute matrices, it can be bundled a little bit more. And coming back to the core thing that I'm really trying to say is that effectively, whether it was a Malaysian guy or the Vietnamese SME generating an invoice, it should then be traded at the same thing. If you're both selling to Apple, perhaps then the pricing should be the same whether you're in Vietnam or assuming that especially what KL had said about narrowing down or cementing the legal risk. If you nail that down, pricing should be the same.
Yeah, that's very, very interesting, Desmond, because, you know, there is a trade finance gap. If we can make the product more tradable and more investor friendly, well, then that is bound to narrow the trade finance gap. If you even just look at what has been done by the ADB under the trade program, especially the ADB in Asia, it's fantastic work. They are actually helping risks that are not bankable become bankable, and it is a means of actually turning a trade transaction into a commodity. But you're moving further down the line, and I think that is probably the way to go. But getting back to Mike, you know, how are you going to get this technology to the poor emerging markets? Like, the biggest trade opportunity in the world right now are coming, I can tell you, is trade between Asia and Africa. It has been growing, but now with the new African Continental Free Trade Agreement, 34 countries and such a young population, it's going to boom. Maybe not next month, maybe not next year, but it's coming. So how do you use technology to create the connectivity to these markets, so we can do business there, but also so these people can get their access to the finance? And putting you on the spot, how can we really democratize the access to working capital or trade finance?
Yeah, and it's a fantastic question, Vincent, and perhaps one of the positives to come out of the pandemic situation we're facing is the drive towards increased digitization and digitalization in some of those markets. And I'll give you some context to that answer, because if you take a lot of those markets, they would have been traditionally branch-based banking models, even on the corporate and SME banking side, taking transaction application forms into the branch for management, going to check on transactions in the branch itself. When all of those economies move to a complete lockdown scenario, by definition, that paradigm ceased to exist and ceased to work anymore. So fundamentally, that step change culturally and hopefully the associated infrastructure that comes along with that will help to, and is already helping to increase the adoption of digital channels in those markets that were traditionally more paper-based or branch-based. And the other thing to consider with a lot of these economies, and Singapore included, is the way that people access services nowadays. You know, not every SME is going to be going into a bank-specific channel or through an ERP system, etc., to manage their financial transactions or apply for their working capital. It's going to ultimately be done through B2B platforms and super apps, whether that's a Grab or a Gojek in Southeast Asia, whether that's an Alibaba, whether that's an Amazon, the list goes on, right? And I think because, going back to the data point, these platforms will inherently have such a huge amount of data and visibility across those actors, but also who they're doing business with. It is only a very small step from taking that into a banking as a service paradigm, where you start embedding financial services, invoice financing, receivables financing directly into those platforms. And, you know, finance providers, whether that's bank or non-bank, as it is today, will access new markets by virtue of embedding their services directly into those platforms through banking as a service.
That's really interesting. So we're on a journey, and well, the train has seemed to be going very slow as far as I'm concerned for a long time. Now I can see it's beginning to build up a little bit of speed. And actually, Wai Yee, you're in Singapore, I'm in the United Arab Emirates, you know, and you have enacted your own version of the MLETR, you know,
That's right.
And we have enacted here in Abu Dhabi Global Markets the Electronic Transactions Regulation. And you know what? It's beginning to make a difference, you know, when when you have the underlying legislation recognizing the functional equivalent of paper documents in electronic records, and when you have these documents, electronic records, allowed to be used in court proceedings, well then, Desmond, this must be music to your ears, because it means these drafts, bills of exchange, promissory notes, in their electronic version as an electronic record, they have the functional equivalent. And this, I think, it'll take a little bit of time, but I think this could be a tipping point we have actually meet. Farooq, you're nodding there, so I think you want to make a comment or at the what I'm saying, or disagree maybe with what I'm saying, you know?
No, I violently agree that I think
that's interesting. You violently agree. Usually people violently disagree with that.
No, I think you've touched on a very important thing, that one of the things which creates a digital island is actually legislation. And a lot of, so like KL mentioned about the piece around getting an assignment legally acknowledged. So, and now you've spoken about physical bills of lading and can that be digitized? So I think that part of the transition from paper to digital will need to be enabled by the passing of standards and obviously getting into a more e-version of various regulations. And as markets like ADGM, and obviously Singapore's done it, UK's done it earlier this week, Bahrain I think was another country which did it earlier on. So hopefully that enabling legislation will make it easier to move from paper into digital. However, having said that, sorry.
Go ahead.
Also want to say is that one is for the law to come in place, but I think this is where I think some of the banks and maybe the alternate financiers can really take a leap in this direction, because many people are in that wait and watch. I still need a wet signature, and I without it, nothing will change. Policy will not change. And I think the more progressive organizations, definitely the alternate financiers who are much more digitally savvy, I absolutely see them kind of looking for some of these changes to come in place so they can steal a march over the more traditional thinking banks.
Great. And KL brought up this legal issue regarding the assignments, which is a really important issue. And what's very interesting in this new legislation, the electronic transactions regulation here that came into effect on 25th of February in ADGM, it also has a cross-border recognition. So when you it still looks like we've islands, but the islands are beginning to connect. So when you have this as part of your ecosystem in Singapore, and you have it then here in ADGM, and there's cross-border recognition, well, over time, we do create a global network where these electronic records can be traded, whether it's a bill of exchange, a draft, promissory note, etc. The bill of lading is an interesting one, but that's probably a story for another day, because there's great debate about whether being a document of title means a document of ownership or not, but I think I better not talk about that right now. So coming back to Wai Yee, any closing words of encouragement you can give all of these people who definitely are on board with the way you set it out in the beginning?
Well, I think one of the things that we do believe is that, what did they say? I think the saying is, it's all the pudding of the pie, it's in the eating. So I think Farooq made it a really important point about the legislation, and I think you brought it up as well. I think the legal certainty certainly helps. And I think the other thing that will help is every one of us taking a leap of faith and actually going digital ourselves, right? It's great thumping our chest to say, yay, Singapore has passed legislation, we've adopted the UN ML-ETR, and so has other jurisdictions. But we like to say we want to go a step further, we want to do something about it. So at least at customs, I think where we are part of the transaction, we have taken that step forward. So the banker's guarantee is another document. Though it's not cross-border, it's often associated as a promissory note. And we've said to ourselves, we've got to, one of my bosses says, we've got to eat our own dog food, right? So today, actually as of last year, we've completely digitalized the banker's guarantee processes. At least if you're lodging a banker's guarantee with Singapore Customs as part of that security to ensure you pay your duties, we now accept and we discharge and we claim against a banker's guarantee, and that's fully digital. So we work with both the local and the foreign banks operating in Singapore to digitalize that. Right. So I think we've also got to ourselves demonstrate faith that the digitalization, the digital version can work. We've got to demonstrate faith that we believe in our own legislation. You know, we're not asking you to take any more risk than what we are willing to do for ourselves. So I think for everyone on the panel and listening in to this webinar, I think it's important to say, you know, we've got to put our own money where our mouth is, right? We can talk about this for a very long time. And the only way it's going to pick up speed is if we all do something about it. And I think that collective effort is going to be important.
Wonderful, Wai Yee, and I must say you've been very smart, and I'm not talking about smart contracts, but if you're going to digitalize anything, guarantees are the ideal one. You know, they're usually one document, they're issued, most of them expire unutilized. So I think it's wonderful. So do what you can do, learn what you learn, and then build on it collectively as you go.
Absolutely.
So that's really wonderful. That's a great example. And also we can see that the world has transformed. You know, I'm around in trade for a long time, but when the thought of a customs person telling me to take a leap of faith is quite an evolution. And a positive
it's a new era, right? We're entering
a new era. I'm very, very much encouraged with this new era we're experiencing here today. So my other panelists, Mike, Farooq, Desmond, KL, any last, I'll just go around word of wisdom, just you'd like to add to the panel and to share with our viewers on this very big question we're dealing with today. So maybe Mike, I'll kick off with you, short and sweet.
Yeah, I guess it's all about adoption as we go forwards, right? And in some ways, the journey to digitize trade for me is akin to the move from, say, cash to Apple Pay to, you know, mobile wallets. Is you've had to move people through debit and credit cards and chip and pin and contactless payments before you've even got them there, and that's part of the cultural adoption. I don't think the technology side or the vision has ever been the problem. It's been the cultural adoption of those practices that is hopefully catching up now.
Yeah, I really like that, Mike. You're painting a picture of evolution, but fast evolution, okay, as opposed to revolution. And I like that idea. So Farooq, maybe back to you.
In the context of the cross-border SMEs, on my wish list would be probably, instead of boiling the ocean, to figure out a couple of corridors for every market where you've got SMEs on both sides of the equation. And rather than try and solve for every corridor, work with the ecosystem of the government, the financiers, as well as the technology providers to solve for that specific corridor problem. And basically try and, if you can solve it for one corridor, then you can start replicating it. That's a slightly more manageable way to go after this problem.
Wonderful. Wai Yee is nodding again. You're actually exposing her theory of doing what you can do now and building on it. That's a great lesson to learn. Thank you for KL.
I have a small request for NTP, but it will be a big impact. Okay, I hope the NTP can become an invoice exchange platform.
Oh,
it has all the information. What it needs is to provide the invoice detail for the financier to go and get it for financing. So it's risk-free because it's fraud-free. And in this connection, India has 3 invoice exchange.
Yes.
China has got a big exchange, and Thailand is coming up with exchange by the end of this year. So I hope NTP can just put something more in making it into an invoice exchange, and that will create a great impact for the SME in Singapore.
Okay,
Not
KL.
quite what you were thinking of, but yeah, I think we can grant your wish in a different way.
Very diplomatically said. Very diplomatically said. So Desmond, I think you'll be following on from KL probably, yeah?
Yes, correct. Because KL stole my ask. No, but
there is a service that will almost meet your needs. Not quite, but I think we will come close to granting the Christmas wishes.
Very convincing.
I probably end off, my parting statement is this. A lot has been said about moving towards digitization, especially the last COVID year. The thing that really sort of struck me was that when I spoke to very traditional lenders in the past year, actually, I would say, and the fact that they no longer talk to me, and we're talking about SMEs here, they no longer talk to me really about balance sheet and the traditional notes, right? They actually came and said, hey, what kind of transactional data do you have that we can help and we can digest? Now, that's a very big change. I never saw that perhaps in the last 3 years. I only saw the shift really towards, perhaps up because of COVID, really because of. Yeah.
Sure, Desmond.
So
I think we're coming full circle here, because years and years ago, when I was doing trade finance in the beginning, being close to the customer, visiting them, seeing their warehouse, doing a little stock check, understanding the trade cycle, this is what it was all about. But then we kind of moved away from it and we went to the credit side. I'm not saying there's anything wrong with credit. Credit is good, credit assessment, but it looks like now we're coming back, but using technology to do it in a better and more efficient manner. So I'm looking at the clock. So I guess getting back to a roundtable question, the very big question, can greater efficiency and inclusivity help close the working capital gaps? And I think the answer is yes.
Yes.
A resounding yes. And today we have all the pieces of the puzzle. We just need now to work together and put them together, and we've solved the problem for the whole global universe. You agree?
No, I say
You
definitely.
agree? Oh, definitely. Okay. Well, I just want to thank you all for being wonderful panelists on this session. Wai Yee, Mike, Farooq, Desmond, KL, and I'm really looking forward to seeing you in person in Singapore in 2022. And we're having a major global trade facilitation event here in the UAE in March 2022, and you are all invited to be here with me. Thank you very much.